welcome to the On the Water podcast. This is going to be our first episode, and of course this is sponsored by Freedom Boat Club. You'll be able to see all the boats around me here, but the goal of this podcast is going to be meet your Nova neighbors, and we're going to be doing things to benefit our Northern Virginia community. And today my first guest is a money expert, and his name is Enzo Giovanni. Enzo, why don't you just do a quick intro, tell us who you are and what you're all about here.
My name is Enzo Giovanni, and I'm a financial advisor based out of McLean, Virginia, specializing in all sorts of financial services, including index strategy and helping people basically position their money in places where they don't lose it and can also grow it.
Awesome. So what we're going to do, we're going to hop back on one of these boats over here, and we're going to sit down for the podcast.
Awesome.
Let's go. All right. Welcome to the On the Water podcast, sponsored by Freedom Boat Club. So we're out here in the nice sunny weather. And today I'm here with Enzo Giovanni, and we're going to talk about some money. So Enzo, tell us a little bit about yourself, what it is that you do.
Well, I'm a financial advisor, and we're based out of Northern Virginia, Tyson's Corner area. And basically I help people position their money in a place where they can protect it and have it hopefully last for a lifetime.
Oh wow, that's pretty important right now with everything going on.
Yeah, the market obviously is pretty crazy. It's a crazy time, and you know, a lot of people that come to me today, they are basically all their money is bleeding, and they all sort of are. The story is the same. It's always like they're right here, but now their money's right here, and they're just trying to find another way. And what, you know, through one form or fashion, they can connect with me, and I basically expose them to some products that they weren't really privy to before. In particular, index products is something that I specialize in, and that's something that a lot of people are sort of gravitating to these days.
Right. And you can tell me a little bit more about that, but I think I heard something like that's the one where your account, it's based on the market, but you have a floor, meaning like it can't go too low, right?
Exactly. It's the floor is zero, actually. And you know, when you think about it, you know, the thing that people don't realize is, for example, you have your traditional IRA or your 401k, SEP, whatever you have, and these accounts are growing tax deferred, and that's good. But when it comes to this notion of compound interest, we've all heard of compound interest, and I think we understand it. Okay, Einstein called it the eighth wonder of the world, and the reality is that, you know, unless you have a 0% floor, there is no true compounding, because at the end of the day, whatever money you have in those traditional retirement savings accounts, it's sort of virtual. It doesn't really exist until you take the money out, right? If you have 5 good years in a row and your money's growing, everybody's happy. And if the market then tanks and crashes 50%, it's not like it's just affecting your money this year. It's affecting all of your money. It's affecting all of the growth. So 50% of all of your money is going down. And so where's the compounding in that regard, right? So the 0% floor, that's one key element, but that's just half of the story. The other half of the story is you have in particular, these breed of products that I specialize in, you also have locked-in gains. So the locked-in gains is what actually essentially guarantees you the compounding of your money. And that's a huge deal that is sort of like almost like this epiphany when people kind of really see the numbers work for them.
Right. And kind of paint me a picture, like who's the perfect person, or who should be looking at these IULs or similar type products?
Okay, so well, you're talking in advance because you mentioned IULs, and IULs is something that I specialize in.
I did a little research.
Okay, all right, there you go. So that's smart, yeah. So IULs is, and to be real quick for the audience, you know, IULs is a form of cash value life insurance. Okay, it's permanent, like whole life, which we're all familiar with.
Right. But
the I stands for index. So that means basically the cash value inside of these policies are growing according to an index. And when I say index, what I basically mean is a market such as, for example, the S&P 500.
Right.
That would be an example of an index. Literally, it's an index of 500 companies. So that's one particular market. That's just one of very many that we could actually assign or attach our money to. But the point is that your money is growing. The IUL is one such example of a type of place where you can position your money. And yes, you have the life insurance component, but what you also have is the cash value growing, and each year the money's going to grow according to the index, and the gain, whatever gain there is, if there's a gain, it's locked in.
Oh, wow.
So again, that's fairly powerful. Now the IUL is a little bit, and I don't just specialize in IULs, but what's actually more interesting about the IULs is that the cash value is growing tax-free. So it's growing tax-deferred, and the money is accessible tax-free. So that is a big reason why IULs are becoming ever more popular every single year. In fact, 1 out of 4 premium insurance dollars in 2021 was IUL. And I will tell you, the reason why that's interesting is because 1 in 4 people don't know about IUL.
Correct.
So what does that say? That's what that's basically saying, is that those in the know and those with money is stuffing a lot of money into these IULs.
Awesome. What do we need, or what does someone need to get started, or how do they approach any of these products or services?
Basically, actually, to go back to your previous question, you said who is actually the ideal client, or who is actually coming to me. And it's people, for example, who sort of hear about IULs. They might hear about it on social media or things like that. And then you have people who basically, it's also people in their 50s and 60s. And you have lots of people, they have this nest egg of money. And so, again, they've lost a lot of money in the market recently. And so they're just figuring out a way, they need to protect their principal.
So they're trying to stop the bleeding.
They're trying to stop the bleeding. They're trying to, and think about it, when you're in your late 50s and 60s, obviously that's the point, given your time horizon, where you want to be a little bit more protective of your money. And especially as you're going into retirement, you want more clarity. You don't want more ambiguity. So to go into retirement, as you see your money going down, by the way, compound those losses with inflation, and you have a double whammy affecting your net worth. And so, you had the value of the dollar is going down, plus your dollar is actually going down because it's losing the market. Right now, there's lots of talk of recession. Lots of indicators, saying that we're heading toward a recession. And regardless of what you believe on that, imagine if you could put your money in a place where you stop the bleeding, your principal's protected because you have the 0% floor. But here's the best part: you can still grow with the market, and that's the powerful part. You can still grow with the market, and yet not have to stress out at night or wake up and see that your money went down 5% because of some tweet that some politician put out.
Wow. So I think I've been hearing, this is like how the rich get richer type thing, because they know about these strategies and they know where to put their dollars.
Absolutely. And it's funny you say the rich get richer, and one of the things that makes me think of is, one of the things that the truly savvy investor, the savvy investors really know how to use other people's money. And so that brings up another point altogether, but just the idea of leverage. And there are index products, places where you can grow your money using the index, 0% floor, locked in gains, generate tax-free income, and on top of all that, you could actually even do it with leverage. Okay.
Wow.
So and these are some of the most exciting types of plan designs that people they just love them when they see it, as to what the potential is for their money. Again, you're protected, your money's protected, your nest egg's protected, but you're still growing. You're not giving up on growth. On the contrary, you can grow your money really well. And actually, to my point before, when you have the locked-in gains, I can't repeat this enough, when you have the locked-in gains, that's essentially assuring you of compound interest. You actually get credit. If you have 4 or 5 years in a row that were great and you made money, the person in these index products, their principal has ratcheted up 4 or 5 times in a row. And let's say the market does tank in year 5 or year 6. Well, guess what? You're that's it. I mean, that's great. But all those gains are locked in. You're not going any lower than
because of the floor. They can't
because the floor and those gains, they get added onto the principal, and so it gets added to your principal. That becomes the new floor for the following year. and that's a huge deal. That's like game changer kind of thing. And the reality is, the crazy part to me is that a lot of people just don't even know that these places exist for their money. And the really sad part about this, Dusty, is that many financial advisors, they just won't mention it to you. And do you know why? Because a lot of these new breed of products, they're insurance-based products. And so, somebody talking about this product, because they don't do insurance-based products. So it's just not, they don't know about it, and it's just not sort of, even though they should be acting in the best interest of the client, it's not necessarily in their best interest to talk about it, because guess what? It would basically be saying, hey, you know what, Mr. Jones, by the way, there's this really cool thing over here where you can actually protect your money. By the way, if we do that, you're gonna have to take your money out, and you're gonna have to leave me as your advisor. So you can see.
So they're doing stuff to protect. Like, they want that guy to keep coming to them for advice.
Yeah, those guys, they you know how it is. They
Yeah.
if your money, if you just lost $20,000 in the market, everybody knows out there when they call their advisor, they all say the same thing. You just gotta roll with it. Just keep it in there. This answer will always be the same. Just keep your money in there. Meanwhile, you see your principal going down, down, and down, and you're just wondering at what point you get really, really edgy. You start to not sleep well at night. You're starting to change plans. You're starting to change vacation plans. You're starting to modify spending. When that happens, it's already affected you. It's already infected you.
Yeah, that's not good, especially as you're getting older, because you may not have time to wait for that recovery to come around.
No, if you're older, like I said, if you're in your 50s and 60s, what they need to know, listen, the magic number for a lot of people is 59 and a half, okay? If you are 59 and a half or older, the IRS says you have to be 59 and a half to be able to kind of move funds freely. Mm-hmm. If you're younger than 59 and a half and you already have a 401k, for example, you would have to pay a penalty to actually take that money and move it somewhere else, potentially up to 10%. Mm-hmm. If you're 59 and a half or older, the beautiful thing is, though, that the IRS empowers you to move your money. And that's good, because even the IRS essentially implicitly is telling you that we understand you're getting close to retirement, so we want to give you a little bit more freedom to move your money. So that's a good thing. So for those people who've hit that magic number, who are approaching that magic number, or even for those people who are in retirement and they're sitting on some money, again, the most important thing that I could tell them is to tell them that, by the way, you do have options, and the option isn't just hedge against the losses by having a bunch of bonds. That's just you're just hedging, and you're kind of, there's not nothing happens. You can't have that great of an impact doing it that way. If you remove your money and say, I still want to grow with the market, but I want to keep it no lower than this, mm-hmm. than the type of index products that I specialize in, for example, then that's a great potential solution for you.
Yeah, it sounds like a win-win, because you get growth, you have protection, and then you still have the life insurance benefits on top of all that.
Right. Well, and the now to be clear, the life insurance benefits, that's with the IUL. But the IUL
specifically with the IUL.
The IUL is a form of life insurance, right? So we covered that. Clearly, there's life insurance in that mm-hmm. type of index product, but life insurance is not the only index product. Like the IUL is not the only index product. There are, for example, annuities. There are different types of annuities, and there are indexed annuities. Okay,
right.
And for those in their 50s and 60s, they might even, I'm not sure what they're thinking of when they think of annuity. Back in the day, the annuities, they kind of got a bad rap, because if you did it a certain way at a certain time, then your beneficiary sort of could get screwed. Okay,
right.
To make long story short, but we have evolved, and people have to realize, just like technology is constantly evolving, so are financial products. So there's a breed of annuities mm-hmm. That have totally evolved, indexed, meaning you're using the index to grow your money, but you have the 0% floor, and you have the locked-in gains.
Oh.
And as opposed to life insurance-based products, think about it. In a life insurance-based product, it's great, all those features we talked about, but obviously part of your money is going towards the cost of insurance, mm-hmm. right? Well, with these index annuities, 100% of your money is growing, and you have a very, very low fees. In fact, there's a way to do it with literally no fees. You have no fees, you're growing with the market, you have a 0% floor, you're locking in the gains, and you can, and that exists, you know.
And the annuities, is that a good one? Break it down for me. Modern annuity, let's say I'm 58, 59, or getting close to that range. I've got a pretty sizable amount in my 401k, and I want to put it somewhere where it's not going to bleed. Is that an annuity? Like, is that a place you can put it?
That would be a place that we would definitely consider. You know, I mean, again, I have to. Everybody's different, right? So I have to really kind of get a feel for their situation and exactly what is their financial situation, what are their goals, and those sort of things. But obviously, that would be potentially a very suitable place to position their money. Okay, so like you said in your scenario, somebody's 60 years old, and they have this nest egg of money. Yes, then that's something they definitely should. If I was them, I would absolutely consider it and look into it. Is it some place where you necessarily put 100% of your money? Not necessarily, but you might decide to put a sizable amount of your nest egg in there, and especially I mean, think about it. Right now, it's 2022, and there's lots of talk about recession, in the latter part of this year, even 2023. So if you're one of those people who thinks like, yeah, the markets continue, if you don't want to lose another 20% on your money, then I would say then you want to consider making a move quickly,
Right.
because the predictions are not particularly positive right now. So now you could leave it in there and just, I suppose, hope, right? But it's
Right.
kind of like, it's not much different than just sort of kind of going all in on every hand in poker,
Right.
and not even bad poker players do that. But essentially, that's kind of what people are doing with their traditional accounts when they just kind of leave it in there. Your money's essentially all in every hand, every day. And the beautiful thing again about these index products, these certain breeds of products, is that the gains are locked in on an annual basis. Okay, so it's
Awesome.
pretty eye-opening.
So, what's the process? Let's say I'm curious. They're watching this from home and they want to learn more, maybe even pick your brain or potentially learn about what will work for them. How does somebody get a hold of you for this?
I mean, basically, I'm sure through your channel they can get my contact info, and
I'll put a link in there. Do you have like a
I have a
appointment
calendar.
scheduler?
Yeah,
or
I have
something?
like a calendar. I have a calendar. So basically, you can just get on my calendar, and for everybody that's connecting to us through this podcast, then we can do it, and there's no charge for the consultation.
Cool.
And the cool thing I would tell people is that it's not, I'm not gonna just have one conversation with them and then like charge them for another conversation. Well, I'm willing to have 2 or 3 conversations, because that's usually what it takes. It takes 2, 3, sometimes 4 conversations to really get a feel for what actually might be a good place, a good thing to do with their money. I have to get to know them. They have to get to know these products. There's some education involved. I will show illustrations. At the end of the day, I'm a broker, so I'm not going to. I basically kind of these products I'm telling you about.
Mm-hmm.
There's many companies that provide these products. So I'm a broker, so I basically shop for the ones that I think is best
Right.
suitable to that particular client.
So it's like a pure advisor role. I mean, you got to meet the person, learn what they need, their goals, what are they trying to do, and then you go and look at what's available, and you kind of like help bring it all together.
Yeah, so if you were interested in, for example, like in an IUL or something like that, then obviously I'm going to make sure the life insurance component is like necessary. Typically people have term insurance and things like that. By the way, on term, a lot of people, they kind of have this false sense of protection, if you will. Term insurance is way better than no insurance. But think about it, only 2%, if that.
Right.
A lot of people say it's under 1%, but let's just be nice. 2%, only 2% would cash out on a term policy.
Right.
So you might say, okay, I got $1 million in protection, and you kind of feel good about it as as the provider for your family or whatever. But there's a 98% chance you're going to outlive that protection. So my question to you is, when that 20 or 30-year policy expires, what do you really have left over?
Exactly.
And that's when people start to really think about legacy and things like that. And so the cool thing about the IULs and sort of what I encourage people to really think about is just go ahead and commit to permanent insurance right now, because you do it right now when you're younger. You don't try to do it when you're older.
Right.
And it's going to be way more expensive because you're more of a risk to the insurance company. Okay, don't forget actuaries are calculating when people are going to die and things like that, right? So you're better off getting something like a permanent policy when you're younger, locking in that. And then the beautiful thing about that is every time you're paying your premium, most of that money is going towards cash value. So, term policy, that's not. You're just sort of just giving money away, and and if you lose that bet, which hopefully you do, you've lived beyond it, and think about it, you've paid diligently every single month for decades on this thing that you have no equity in. And had you just put a little bit more, you could have had equity in all those years, growing an asset that's tax-free and optimizing the cost of insurance for yourself. Permanent policy covered till you're 120 years old. So the legacy component is a given. You don't have to recalculate or say, wait a minute, okay, what's my real situation? And so lots of times people come to me and I'll ask them, what's your life insurance situation? And they'll tell me I have this, and this. And it's sort of kind of an eye-opener when I say, okay, but... And another thing they don't realize is that a lot of times those policies are annual renewable, meaning the charges are growing up every single year. And so it doesn't look like that much now, but 10 years from now it's going to be a lot more. And for that amount of money, you could have had a permanent policy where more of your money was going towards cash value.
Oh, wow. And just to recap a little, so there's annuity can be completely separate from insurance. So if someone just has money they want to do some things with, they can get with you and do like an annuity or something even without the insurance.
Absolutely. Yeah.
Or they may want to do both if they don't have a good insurance situation set up.
Exactly. And those are the situations, a lot of times they might, given the situation, it's entirely feasible that they say, you know what, let me get an IUL to take care of certain issues or financial needs and goals, and let me also do some type of index annuity and use that for a portion of my money. Some might just say, you know what, no, I'm good on the insurance for whatever reason. Maybe they already have whole life or something like that, and they're good to go. And they say, you know what, I just want to protect my nest egg and protect my principal, but they don't want to give up on the growth. So it's like, hey, great, go over here. And there's more to it, obviously,
right.
And that comes out of the conversation. But though, if there's, that'd be my best advice, for those. Is to just check it out, and yeah, if they get connected with me, I can basically just we get to know each other, and I can just basically tell them, this is what your money, here's where your money is now, here's what where your money could be, and here's the difference, right? And then and they trust me, everybody knows their money. I'm telling you, I talk to like maybe 5-6 people a day, and everybody's telling me the same story. Their money was right here, now it's here.
Yeah.
And they're just kind of thinking, scratching their head, and they just don't know, like, what can they do? The great thing is, though, there is an option, so they just need to learn about it.
Yeah, I'm gonna have to get you back out here, because at the boat club, obviously we're members only boat club, and we have a lot of small business owners, we have a lot of retirees, and we have a lot of people that are thinking about their money in the boat club. I'm definitely gonna have to get you back. Maybe do some co-marketing with the members.
I love boats and I love water, so
yeah.
I'll come anytime.
Yeah, that's the way to do it. Well, thanks for stopping by. And again, just to recap, this is the On the Water podcast, episode 1. So this is the first episode sponsored by Freedom Boat Club. And I thought with everything going on, and because I'm obviously talking with potential new members to the club, and we're talking about money every day. Like, they're worried about the market. Everybody's worried about money. So I figured, why not, let's get an expert in here and just to kind of talk about how to protect our money.
Yeah, absolutely.
But again, Enzo, thanks for stopping by, and I'll see you on the next one.
My pleasure. Take care.
Sounds good.